Hello everybody, what's going on? So today is May 15, 2026. And if you're watching the ticker, you know Sofi Technologies is catching some heat today. The stock is drifting down about 2% as we head towards the weekend. Now, if you're a shareholder, you might be feeling that familiar Sofi frustration. We just came off a Q1 where the company set a record across the board around 1.1 billion in revenue and GAAP net income that more than doubled to 167 millions. So why the slide? It really come down to three things: the tech platform, the short seller shadow, and the guidance trap. Revenue from Galileo and Technisys dipped 27% to 75 million because a large client transition of the platform. In a growth hungry market, any minus sign is a red flag. The second, the short seller shadow. Even though analysts have largely debunked those shorts report claims of financial engineering, that skepticism act like an anchor on the share price. Third thing, the guidance trap. Anthony Noto and his team are disciplined. They beat expectations, but they didn't raise the 2025 full year guidance as aggressively as the Bulls wanted. But here is where we need to zoom out. If you're seeing red today, you are missing the massive green underlying business. SoFi has officially transformed into a diversified powerhouse. Member growth is at 14.7 million, up 35% year over year. They added over a million new people in a single quarter. More importantly, productivity loop is working. When someone joins for a loan and stays for high yield savings or the new business banking platform, the cost of acquisition drops to almost zero. That is how you build a moat. And as for credit quality, these aren't subprime borrowers. We are looking at an average income of 154,000 and a 745 FICO score. The bottom line, the stock is trading at roughly 27 times of its 2026 earning forecast. For a bank, that's high, but for a tech driven ecosystem, growing its bottom line by 50%, it's a bargain. We are seeing a classic disconnect between price and value. The price is lower today due to short term noise, but the value is higher than ever. SoFi has now posted 10 consecutive quarters of GAAP profitability. They are eating the legacy dinosaurs' lunch. While the weak hands might be selling today, the diamond hands are looking at those 12-month analyst target in the mid 20s to low 30s. Anthony Noto is building the everything app for money, and every record breaking quarter brings us one step closer to that target. So stay disciplined, do your research, and remember the best time to buy a world class company is often when the market is too distracted by the noise to see the signal. Now let's go deeper into the plumbing. To understand why the market is mispricing this, we have to look at the lending segment. In 2024 and 25, everyone was worried about high interest rate killing loan demand, but look at Q1 2026. The personal loan origination didn't just survive, they thrived. Why? Because SoFi isn't a lender to the average American. They focus on Henry segment, high earners, not rich yet. When you have a member base with an average of FICO of 745 and an income over 150K, your credit losses don't look like everyone else. Why traditional banks are setting aside massive provision for credit defaults. SoFi net charge of rate remains industry leading. They aren't just selling debt, they are managing risk better than the legacy dinosaurs because they have better data on their members' entire financial life. Then there's the financial service segment. SoFi Money, Invest, and Credit Card. This used to be a loss leader to get people in the door, not anymore. In Q1 2026, official service contribution profit reached a critical inflection point. Think about productivity loop. A new member comes in for a high yield saving account because SoFi is offering 4.8% APY. That member then sees the relay tool track their spending, and realize they should consolidate their credit card debt into a SoFi personal loan because SoFi already has their direct deposit and their spending data. They can approve that loan in seconds with zero marketing cost. That is the flying wheel in motion. It's why their cost to acquire a second product from a member is essentially zero. No other bank in the country is doing cross selling this efficiently at this scale. I also want to address that 27% dip in the tech platform revenue heads on. The bears are shouting that Galileo is losing its luster, but let's look at the transition. Yes, one large legacy client moved off the platform, but SoFi is simultaneously onboarding three Tier 1 international banks on the Technisys core. Anthony Noto has called this the AWS of fintech. They aren't just providing the entire cloud native core. Moving a tier 1 bank is like performing a heart transplant. It takes years, not months. The revenue dip we see today is the lumpy nature of enterprise tech sales. By 2027, when these massive institutions are fully live, the tech platform won't just be a side hustle. It will be the highest margin part of this entire company. You're seeing the J curve of the growth right now, and the market is missing a temporary breath for a loss of momentum. And finally, let's talk about the competition. JP Morgan and Bank of America are spending billions on digital transformation, but they are building on top of 40-year-old mainframe system. SoFi is native. They are agile. They can launch a new business banking feature in 2 weeks, while legacy banks takes 2 years. So when you see the stock trading at 27 times earning while the bottom line is growing at 50%, you have to ask yourself, are you buying a bank or are you buying a software company with a banking license? The signal is clear. SoFi is capturing the most profitable demographic in America and serving them on a tech stack that they own from top to bottom. The noise of a 2% Friday slide is just that noise. The signal is a decade of growth ahead. So stay focused on the long term vision of the everything app. I'm keeping my target exactly where they are, mid 20s by the end of this year. I will see you back here on Monday morning to see how the market reacts to the realization that SoFi is officially too big to ignore.